Hey, hello, Jack Tubbs from the J Team at Realty One in Surprise, Arizona, coming to you on this beautiful Friday here in the Valley in Phoenix, Arizona. Hey, I want to talk to you about a subject today that leaving the subject we've been talking about over the past few days about protecting our homes from natural disasters. I want to talk to you about what's going on at the CFPB, which is the Federal Consumer Protection Bureau. And basically what they do is they oversight and make sure that there are no predatory lending practices over any kind of loan, whether it be like a payday loan, car title loans, all that kind of stuff. But I want to talk today basically how it might affect the mortgage industry. We've got a new appointee that is going to head up the Consumer Federal Protection Bureau. His name is Rohit Chopra, and he was actually in the CFPB before. He kind of was doing oversight for student loans and making sure there were no predatory lending practices there. Well, he's now going to head up the entire CFPB. Kathy Krenger, who was there, she left as soon as Joe Biden was inaugurated because we know that Joe Biden, and that it seems to happen with every administration as they come in, that they pretty much clear out and bring their own appointees in to cover all these different departments and bureaus. So Rohit Chopra is now there. And what's going to change now? Well, under the Trump administration, the CFPB was kind of said it was declawed or defanged, that they didn't seem to quite carry the same authority, the same power that they did under Obama's administration and of course this bureau became into existence under President Obama. And basically was just to make sure that with the great meltdown in the real estate market that we realized in, say, 2006 through 2012, there were a lot of predatory loans. There were a lot of loans given to people who really couldn't afford them. A lot of the doc-free loans, all these other different things that went on that caused people to default on their mortgages because the lenders were not going through the processes that they should have to make sure that the people they were giving mortgages could afford the mortgages that the lenders were giving. That they were, they might have made $50,000 a year, but hey, go ahead and buy a $500,000 home. Well, unfortunately, on a $50,000 a year salary, to make a mortgage payment on a $500,000 home is really kind of difficult. But this is all done on speculation of the real estate market, how prices were rising, and how much value the lenders thought that the house would be should they have to foreclose on a lender, on a borrower, that they would still, they would make money just based on real estate values alone. And we know when the bottom fell out of the market, that didn't work out really well for lenders and investors alike. But what's going to change under Mr. Chopra's reign as the director of the CFPB? Well, a lot of things like payday loans, auto title loans, all these kind of things are probably going to be under greater scrutiny. I'm sure all the contracts and all the lending documentation that goes on with all those kinds of loans is going to be under the microscope, and there are probably going to be some sweeping changes in that industry to make sure that people don't get caught up in loans that they can't afford or that take advantage of them by charging usury style interest rates, etc. The thing that's going to happen, and also they're probably going to respond really favorably to the COVID-19 economy, which means they're probably going to extend out foreclosure moratoriums. They're probably going to give forbearance another kick in extending it. These kinds of things. He's very pretty much set on that kind of mindset to make sure that they don't have to deal with foreclosures, or people getting caught up in loans and being sued, etc. They're going to try and expedite that, try to make things a little bit tighter for consumers who can't afford things to get them. But the main thing that's going to happen is that he's going to reinstate probably fair lending practices. He's going to reinstate the Fair Lending Office, which is also going to make sure that all the lending is done, all the language that is on every contract with every mortgage broker is going to be very plain, very easy to understand, that debt-to-income ratios are going to be looked at very extensively. The ability to repay, which was kind of a new standard that was being used lately as far as one of the standards by which lenders were qualifying borrowers to be able to take out a mortgage, is probably going to have less impact other than what they're going to examine as far as debt to income ratio. How much debt are you carrying? How much house can you really afford based on that? Because that actually really looks at the free income that you have. I don't know if they're going to let you pull in other family members that might be living in the house and their income to be used towards a mortgage payment. Thereby mean that if you got to be on the mortgage to be able to do that, they just won't consider your income, and that's going to probably cause some other issues down the road. So, but fair lending will probably be probably the fair lending office is going to once again be instated. So that means that a lot of more fair lending practices that kind of were pulled back, were eased back a little bit under the Trump administration are going to be reinstated. Sharing financial data is probably going to be under really tight reins. In other words, a lender's not going to be able to share your data with anybody else. You know, and it won't be social security numbers, all that kind of stuff. But basically, hey, this person qualified for a $500,000 loan. They could share that information with other financial institutions that might be interested in that kind of stuff. That will probably end right away. And they will regulate overdraft fees, especially when you overdraw your bank account, how much fees you pay and penalties and all that kind of stuff. And they're definitely going to set a higher bar for discriminatory standards. They're also, because we have so much new technology, because of COVID-19, that people have been able to close virtually as opposed to in person, all these other kinds of things that have been happening. They're going to make sure that all that data is compliant with current standards, laws, and rules and regulations. Those will be the main things. And with all that being said, it's probably going to lengthen a couple days of what it takes to get a mortgage. More people are going to be putting more emphasis on the closing disclosure, the CD, which you sign 3 days prior to closing your mortgage, unless you sign away that ability. So these are the things we kind of look at. It's not going to be huge changes. Just realize that you're probably going to be under a little bit more scrutiny as you apply for mortgages as time goes by. We're going to see more fairer lending practices, which means it probably going to take another day or two to process a mortgage as it goes through underwriting. Not huge changes. Shouldn't change the rates, though. We do continue to see rates just, well, they're all signs point that rates are probably going to go up unless the economy takes this huge swell turn, and the rates will probably stay same and stay very favorable. But even at 4%, if we get up there, those are still excellent rates to buy a home. Hey, this is Jack Tubbs from the J Team. If I can help you, refer you to a lender that can help explain what I've just given you in even greater detail, please don't hesitate to give me a call. You can get a hold of me at 248-330-7972. That's 248-330-7972. You can email me, Jack at thejteam.house, and that's JACK at THE, the letter J, the word team, .house. Or you can call the office and talk to any of my team members. They can refer you out to their favorite lenders who they've worked with before, and you can call them at 623-252-4061. That's 623-252-4061. Hey, this is Jack Tubbs from the J Team in Surprise, Arizona, wishing you a fantastic Friday, and I will see you on Monday. Bye-bye.